I got a question coming in here. I'm going to try and get to that before I go on. Do I have to do a payroll remittance if I'm taking money of my company that are directors' advances?
You might want to consider going to one card.
So directors' advances are a loan. Those don't trigger payroll. However, there's rules around those loans that basically say they have to be basically repaid within a year. And the most common way of repaying that is to declare them as a salary. So the director's advances themselves aren't your payroll, but they are in most of our clients what is going to determine what we declare as your director fee. So director's advances, money you've taken out as a loan. Director's fees, the salary we declare to clear the loan, okay? So it's important you have a discussion with your account manager to determine whether you need to do a payroll remittance this year. But generally speaking, if you've taken money out, we're probably going to need to declare that as a salary. Okay, there's always a trick or two up our sleeves. We've always got one or two up our sleeves, but we are limited, right? We are limited, and oftentimes we are limited by the actual actions that have taken place. And so speak with your accountant and your account manager, and they'll help you figure out what to do from a tax planning perspective. And what I would say is you probably received an email just the other week from us with our source deduction planning worksheet. I would recommend completing that and sending that over to the accountant, even if it's not, if you're not 100% sure how to complete it, do it to the best of your ability. That'll just arm them with more information so they can make that call with you more effective. As I said earlier, the failure to file penalty on payroll is the steepest of any taxes. It's 10% if you're a day late. In addition, if you've missed more than one payment, they can ramp it up to 20%. And so the penalties here are very, very steep, which is why we do webinars, we do reminders, we over remind when it comes to payroll remittances. And that's because the penalties are so steep. Again, the minimum, if you are in a time crunch session and you won't have time to figure out the planning, at minimum, pay at least the CPP, the maximum CPP amount for the number of employees that you plan to do any income splitting with. That'll give us time to effectively do a little bit more tax planning between now and when we actually have to file the T4s. The T4s have to be filed by the end of February, but the payment in most of your situations is going to be due January 10th, although we'll typically tell you to be by January 10th.